another episode of Chart the Markets. I hope I didn't forget everything I ever learned, and hopefully nobody else in here did either. I want to put out a special thanks to all of my friends at FEG Token and SmartDefi.com. Some true stand-up human beings, and we've been friends for a long time, and I'm glad to call you that. If you don't know anything about SmartDefi.com, simply head over to that website, and also check out FEG Token while you're there. It's true DeFi, where you can tokenize real-world assets and a whole bunch more. So please check that out. And of course, don't forget to, if you're not signed up already with our exchange partner, BYDFi, please head over to their website. You can log in with the code K5Z4T, and all those were capitals, and then P, which is lowercase. Capital K, 5, capital Z, 4, capital T, lowercase p. That would be greatly appreciated. And of course, every session we give away some trading bonuses to people signed up under that link. So here we go. Let's have some fun. Because, you know, one of the things about vacations is that when you're when you're on them, everything slows down, right? We talk about blocking out the noise, and it sounds easy, but it's not, right? It's hard. We're bombarded with social media and news and messages left, right, and center. But it is nice when you do get away, because you really do get to block out the noise. Like, I mean, you hear nothing. You don't even hear the sound of your own voice after a while. And that's kind of healthy. And what it did for me, I think, is remind me yet again how easy it is to overcomplicate what we do here. Right? It's really easy to do that. With a blink of an eye, you can head down a rabbit hole, chasing the best indicator ever known to man, or something that shows you a pattern that's happened 19 times before on a Tuesday. Right? And then we're just lost. And what are we trying to do? We're just trying to follow the ebb and flow of money. We're just tracking price. And then we realize over time that what we see is fractal. In other words, it all repeats on various time frames, on various assets. Small time frames, longer time frames. It just takes a lot of time to figure out what that feels like as you move through these cycles, because it'll feel like time is standing still when you're looking at daily, weekly, and monthly charts. But as all we're doing is following money. And to block out the noise, simple filters, right, that kind of help us determine whether or not we're on the right side of a trade. You know, are we long in an uptrend when we should be? Are we short in a downtrend when we should be? And are we entering at a safe time? Sounds simple, but it takes 5 seconds for us to get lost in the thick of thin things. Right? These white horizontal lines that you see on this Bitcoin chart are the same lines that we've had here for, I think we can safely say, probably months now. And we talk about levels, right? How current price revisits past. When you're in an uptrend, current price is looking for past price. An area where it's been before, where buyers and sellers have shaken hands. And understanding that simple philosophy allows us to get little cues where price might find support and resistance. It'll be in those areas where it's been before. And what's interesting, because not not really looking at too many charts over the last couple of weeks, what I found fascinating is that when we're looking at Bitcoin, and I've taken off the moving averages and all that stuff, it's all we're looking at is just levels, right? We talk about why we put these horizontal levels in here, and it's just a real quick way of trying to find support and resistance, because that helps us when we're starting to build a trade. And as the trade unfolds, and as an example, as price moves higher in this case, where might we find a little bit of resistance? Well, this level that we dropped in here at 117,323 has come back to be relevant. Well, why is it relevant? Because it's been there before, several times. And it just decided that, hey, you know what? I don't have enough gas, so I'm going to have to regroup and try this all over again. But these levels, and on the way down, where does it seem to find support? Well, an area that we've pointed out in the past. And again, that's why we drop these levels in here, because they really do help us as time moves forward. This is all about the ebb and flow of money. It's just the market inhaling and exhaling. That's all it is. So in the simplest ways, you can really see how price just likes to go back to where it's been before. And of course, everyone on this who's been watching Bitcoin always has the where's it going, where is it going mentality. And where it's going is typically where it's been before. Right? What are little signs that we see to help us determine when there might be reversals? How about that? Look at that doji on the weekly chart, showing up, wicking at what? A support and resistance level. Where did price pull back to? Well, where it's been before, 112.016. Actually sunk a little bit further, it came back, and then wicked through that level again. This is why we look at multiple time frames, so that we can understand in a fractal context what might be happening in the grander scheme of price action. And you really have to learn to trust your charts, right? And that takes time. And it's all repetition, right? Seeing things over and over and over again. Eventually you're going to go, yeah, you know what? I don't want to fight that anymore. Okay? So in the simplest ways, you can see current price revisits past. We're just looking at price history. That's it. That is it. What else can we toss on here just to help us a little bit? Hey, the volume profile. We talk about it all the time, right? So if we know that current price looks for past price, which I think everybody here understands, well, if it's been down here before, does knowing that there's a draw for price, for current price, to find its way down to a couple things: upper value range, and then this level that we've drawn here, which just happens to be on the bottom of a shelf within a volume gap. So if we believe that current price will look for past price, and it's kind of the path, likes to find the path of least resistance, looks where buyers and sellers have shaken hands in the past, and then we're able to see relevant draws for price, which we know the upper value range is, because this kind of might be considered a premium in a sense. And then you also have the point of control on the daily, which is way down here at 83, but there's a big gap in there. But nevertheless, this is what you're dealing with today, or in the immediate future. Draw for price at the upper value range. All this level that you've shown before, you've already sat on this once, twice, 3 times, 4 times. So yeah, that's a legitimate draw for price. So adding the volume profile kind of helps reinforce the understanding of knowing that price is looking for, or current price is looking for past. Because if current price is looking for past, well, this is a level of past price that's condensed, right? Even more so is the point of control. But that's what current price will be looking for, and these are how you get targets. And by utilizing the volume gaps, and I know there's a few people in here that are really getting good at trading in and out of those volume gaps, you'll appreciate what I'm talking about. Right? It's incredibly helpful. Incredibly helpful. Now remember too, I know we've all we've missed a few weeks, so if you have any questions, just let me know, and we'll fire them up. I am just going to share this tab instead. Now, this is going to look a little noisy, this tab. This is CFX that our friend Rico talked to us about. And what I wanted to show you here is, you know, we talk about these runs of, and I'm sorry there's a lot on this chart, but what do we have on it? We have on the 5 EMA, the T line, and then a 20 MA, a 50 MA, 200, and 100, which I don't really need. And then the red is the 200. When you're trading above the 20, the 50, and the 200, at some point in time, you have to be, you know, keeping your eyes open that you might come back and test those levels. And those levels, because they're so spread out, are attractive targets. So if we just kind of open this chart up a little bit here, you can start to see that this might be a top. Those wicks are representing what? Sell pressure down. You start to roll, and you can see on the 5 EMA, it goes from white to red, which has given us an early clue that maybe we're going to sell off a bit. And then here we go. And what's current price looking for as it breaks down? It's looking for past price. There's your 200, right? Impulse down, sideways, but doesn't break the 5 EMA or the T line, right? So what does this mean? There's an early clue on this 4 hour that you're going to roll over. There's your confirmation in here. All of the divergence that you see between the T line and the 5 EMA is telling you there's momentum down. The wider the gap is, it's just momentum either up or down. This is momentum up, right? The wider that gap gets, this is momentum down. And as long as that divergence is there and in place, you're kind of safe